Hey everyone, I'm Jack from Finoptimal, and in this video we're going to be covering 3 QuickBooks Online tips specifically for SaaS companies. Let's get into it. First up, we're going to talk about how to structure a chart of accounts. Say you're a SaaS company that sells multiple products. If all of those products are bundled into one account, it can cause confusion on where you're actually earning your money. And that's why typically SaaS companies want to use separate income accounts for each of their products so they can determine easily how much income each one is responsible for. In order to do that, you can navigate to the chart of accounts in QuickBooks and create accounts for each product. For this example, we'll make product A, then we'll make product B, both of these as income accounts. Then when we open up the P&L, we can see all of our products separated out easy. But now what about on the expense side? What if we want to distinguish departments from one another so that we can understand, say, how much marketing is spending versus how much engineering is spending? To do that, we're going to use class or department tracking categories. So first, we'll head to our account settings, and then we'll open up the advanced settings. There, we'll be able to turn on track classes and save. Then, we'll go back to the settings icon, open up all lists, hit classes, and then from there you can set up classes for each of your departments. For this example, you can see that we set up customer support, engineering, finance, and a few more. This is especially important for payroll because your employees should be hitting each of these classes based on which department they work in. Overall, this structure is just going to give you a better picture of departmental spend and revenue, helping you make more informed decisions. We do want to point out that this does require a QBO Plus subscription, but in our experience, we found that the Plus subscription level is definitely worth it. And finally, a little pro GAAP tip for you. Make sure that customer service payroll expense hits cost of sales. Now let's look at tip number 2. Since Stripe is a popular payment processor with SaaS companies, we're going to look at how you can record Stripe activity inside QuickBooks. Payment processors can make accounting complicated. You get one deposit per day, but that deposit includes earnings, fees, deductions, and refunds all netted together. The goal would be to take that one deposit you receive and break it out into the many different products and transactions there might be. To do this, accountants use a ton of different methods and reconcile that data, but here's what we suggest. First, we're going to go into Stripe, open up the Balances tab, and find what they call the balance report. Then we're going to go download the balance change from activity section, making sure it's itemized and all columns are included. Next, you'll head over to QuickBooks and open up the chart of accounts, and here you'll want to create a bank type account. You can call it whatever you want, but we'll call it Stripe Cash, but make sure it's a bank account. Going back to that balance report file from Stripe, it shows a breakout of all deposits. So what you're going to do is summarize that information by using it to make your journal entry. When we finish up with that, we'll hit save. And then we'll look at our updated P&L, and it should look something like this. And then another tip for you, make sure those payment processing fees are hitting cost of sales. Now for the final tip, we recommend setting up recurring revenue tracking for your SaaS subscriptions. Say your company offers both a monthly and an annual subscription plan. When a customer signs up for an annual plan and pays, say, $500 up front, it might be tempting to just recognize all of that revenue immediately. However, that can skew the financials and paint an inaccurate picture. That's why to properly track recurring revenue in QBO, we recommend first creating separate income accounts for different subscription types, maybe monthly, annual, etc. So obviously we'll name the monthly account for product B monthly, make sure it's an income account, and then we'll go in and make an annual account. Again, marking it as income, making sure it's a sub account, and then calling it product B again. With this, we can now break out our products into monthly or annual or whatever we need. And once we create those, we'll make a journal entry to move income from the P&L to the balance sheet. We'll debit the annual product subscription and then credit deferred revenue. We'll save that, which should leave the amount on the P&L exactly zero. Then we'll want to use QBO's recurring transaction feature for consistent revenue recording. So we'll start with a new journal entry. We'll move $2 a month from the balance sheet back to the P&L. Once we hit Make Recurring, we'll give it a name, input start date, have it end after however many occurrences, and then we'll hit Save. Finally, you'll need to implement a system for tracking deferred revenue to ensure accurate financial statements. This process can become pretty complex, time-consuming, and spreadsheet-heavy, and that's where a tool like Accruer can become really useful. Accruer shrinks accrual accounting from hours to seconds by automating deferred revenue, prepaid expenses, and fixed assets directly in QBO. And those are our 3 tips for SaaS companies using QuickBooks Online. As an accounting firm that also happens to be in the SaaS business, we use these tips every day for ourselves and for our clients. So if you have any questions or you want to see tips from any other industries, be sure to drop us a comment or find us at finoptimal.com.